Hi, this is Jack Schwager. In this video, we'll take a closer look at how the directional weight indicator can be used to trade the markets. Now, the directional weight indicator is applied in analogous fashion to the trend weight indicator, so one good way to get a feel for how to use it is to compare it to the trend weight indicator. In this particular chart, or dual chart illustration, we have the Japanese yen and the trend weight indicator on the upper chart, and then we have the same market of Japanese yen with the directional weight indicator on the lower chart. Now, in both cases, we are using a threshold level of 20, which means you need to get the indicator, the trend weight in this case, and the directional weight in the lower chart above the 20 to get a buy, and below the minus 20 level to get a sell, and the area between plus 20 and minus 20 is basically a neutral region. So beginning with the trend weight indicator on the top for comparison purposes, let's start, say, in this neutral region where the trend weight is going from this neutral territory to minus 20, giving us a sell signal, which effectively remains intact throughout the rest of this chart as the trend indicator stays deeply negative. To compare it, let's go to the lower chart and the directional weight indicator. Here, a reminder that the directional weight is calculated by taking the trend weight and subtracting the overbought oversold indicator. Now, the overbought oversold indicator is this red line in the upper chart, and essentially directional weight here in the lower chart is similar to the trend weight by breaking the minus 20 level at the same point. The overbought oversold is 0 at that point, so they both get the signal at the exact same point, the sell signal that is. And initially the directional weight goes down very sharply. It then begins to move up as the overbought oversold indicator moves down, and that is subtracted from the deeply negative trend indicator. So over time, as the overbought oversold gets deeper and deeper in oversold territory, the directional weight climbs until this point where we get to the minus 20 level, effectively going into neutral territory and a liquidation signal for the existing short. This is the same point in the upper chart, and of course the trend weight still remains negative at that time. But you can see how the two indicators at least behave differently for this point. The directional weight indicator continues to move up and eventually gets above the plus 20 level, giving you a short-lived buy till we come down below the 20 level, and eventually back to minus 20 for a sell. So we get a bit of a different configuration with the directional weight in this particular case. And the bottom line here is simply that both indicators can be applied in similar fashion, but they behave a bit differently because the directional weight will incorporate the overbought oversold. And which one you use, that is whether you use a trend weight indicator or the directional weight to generate buy and sell signals, is a matter of choice, and you can experiment in using both or research using both and decide which one is more compatible with your trading approach. This concludes video 4. In video 5, we will take a close look at the dual trend indicator and applying the dual trend to actual trading.